In the economy this week, Federal Reserve policymakers remain concerned about inflation, and there continues to be a lack of clarity about interest rate cuts. Let's take a look at what happened. Before we begin, remember to like this video and subscribe for more economic updates. On Wednesday, the Federal Open Market Committee published the minutes of its most recent policy meeting. The two-day meeting, which ran from April 30th to May 1st, followed a string of different inflation readings that all landed well above the Fed's 2% target level. Participants observed that while inflation had eased over the past year, in recent months there had been a lack of further progress toward the committee's 2% objective. The minutes read, adding, "The recent monthly data had shown significant increases in components of both goods and services price inflation." Several Fed officials had made public statements since the meeting that indicate they don't expect the central bank actually will raise rates in the near term. That said, the minutes did reveal that various participants mentioned a willingness to tighten policy further should risks to inflation materialize in a way that such an action became appropriate. While traders are still betting on a rate cut in September, they no longer seem as optimistic about it as they were just a week ago. According to the widely followed CME Group FedWatch tool, the chances we'll see a rate cut in September have fallen from nearly 70% to barely 50% in the last 7 days. Also this week, those feeling glum about the prospect that rate cuts could remain elusive didn't get any encouragement from S&P Global's preliminary Purchasing Managers Indexes for May. On Thursday, S&P Global reported that its flash manufacturing PMI climbed to 50.9 this month, soundly beating economists' projections the index would land at 50.3. The flash services PMI made an even bigger jump in May, rising to 54.8 from 51.3 in April. In other news, the National Association of Realtors reported on Wednesday that sales of existing homes fell in April for the second straight month. According to NAR data, existing home sales dropped 1.9% month over month to a seasonally adjusted annual rate of 4.14 million units. The decline in April follows a drop by 4.3% in March, prompting some observers to speculate if a slowdown in the housing market could be taking shape. Signs of a possible contraction in the housing market also were evident in the numbers for sales of new homes that were released by the Census Bureau this week. On Thursday, the government reported that sales of new single-family homes fell 4.7% in April, to a seasonally adjusted annual rate of 634,000. The drop would have been even bigger if not for the fact that the March number was revised sharply lower, from an originally reported 693,000 units to 665,000 units. Finally this week, continued strength in the jobs market was evident in the latest figures for unemployment claims released Thursday by the Labor Department. First-time claims fell by 8,000 to 215,000 in the week ending May 18. That followed a drop in claims by 9,000 the week before, marking the biggest week-to-week decline since last September. That's all for now. Have an incredible 3-day holiday. We won't be here on Monday, but we will see you next week. This is Devlin Steele for Augusta Precious Metals, signing out.